All right, so next up is state and local tax, or commonly referred to as SALT. So that cap has been raised to 40K. There was actually a lot of back and forth politically about whether that was going to be included or whether it's going to be raised or not, but it did make it, and it was raised to 40K. So Phil, tell us a little bit about this, how it works.
This is probably one of the highly contested items of the TCJA, where they capped it at $10,000. Before, your state and local taxes that you can include on your personal return if you itemize, take the itemized deduction, you could. It was never capped before, so this really negatively affected a lot of people, especially in high tax states, but even in lower tax states like here in Georgia. I mean, $10,000 does not go a long way with property taxes, some personal taxes, and state income taxes. So with this larger deduction, it's going to allow a lot of people to be able to then fully take advantage of itemizing as opposed to taking the standard deduction on their personal return. So I think we'll see a lot more of that, and it's going to be quite beneficial.
That's awesome. Yeah, this is a big one for our clients in places like California, New York, and even parts of Georgia where property taxes are high. Let's just say you pay $20,000 in state income tax and maybe another $12,000 in property tax. Well, under the old cap, you could only deduct $10,000 in total. Now you get to deduct all $32,000, which, depending upon your federal tax bracket, could be a $7,000 or $8,000 swing in tax liability.
To learn more about how your business could find potential tax savings under the new tax law, click the link in the description to download our free PDF, 10 Ways the New Tax Law Could Reshape Your Bottom Line.